Imagine waking and everything you built, your savings, your retirement, your legacy has vanished overnight. Not because you made a bad decision, but because the market decided it was time to collapse. That's exactly what happened in 1929, the worst financial disaster in American history. And here's the part that hits the hardest. It didn't start with a war. It didn't start with a virus. It started with belief. Belief that the good times would never end and that the stocks only went up. And here we are again. Different tools, same temptations, except this time the collapse would be streamed live in 4K straight to your iPhone. In this video, we are pulling back the curtain on what really caused the 1929 crash, how the mania built, how it unraveled, and why history doesn't repeat, but it rhymes. And at the end, I'll reveal a strategy the wealthy have quietly used for decades to shield their money from market crashes, and how you can use the exact same tool today to protect your future from becoming someone else's cautionary tale. It's easy to look back now and say, of course it was going to crash. But in 1929, it didn't feel like a bubble. It felt like a breakthrough. America was roaring. Cities were rising. Skyscrapers stabbed the sky like monuments to ambition. Jazz pulsed from every club. Radios hummed in every home. The future wasn't approaching. It had already arrived. And on Wall Street, it was pure euphoria. The stock market had nearly tripled in just 2 years. Secretaries were trading stocks on margin. Cab drivers made more money in the market than behind the wheel. Shoeshine boys handed out stock tips with a grin. Everyone was in. Everyone was getting rich. And if you weren't, you were the fool left behind. The secret? Margin. You could buy $1,000 of stock with just $100 down and borrow the rest. Why not? The market only went up one direction, up. The newspapers called it a permanently high plateau. Charles Mitchell and Irving Fisher, the Jim Cramers of 1920s, swore the boom was bulletproof. And President Hoover confidently proclaimed, "We in America today are nearer to the final triumph over poverty than ever before in the history of any land." That kind of overconfidence? That's the kind history loves to punish. Because while the band played, while champagne flowed, while everyone danced like the good times would never end, something beneath the surface had already begun to crack. Corporate earnings were stalling, banks were overleveraged, margin debt had exploded, but no one wanted to hear it. To question the boom, that was un-American. It was Rome in its final days. Everyone dancing, but no one watching the smoke on the horizon. And by October of 1929, that smoke would turn to fire. It didn't happen all at once. Not like a bomb. More like a slow-motion detonation. A series of aftershocks. Each one worse than the last. It began on a Thursday, October 24th, 1929. Black Thursday. The opening bell rings. Phones ring off the hook. And instantly, panic. Stocks begin to plunge. Crowds gather outside the New York Stock Exchange, so dense, police are called in to control them. Inside, the ticker tape is running hours behind. Investors are flying blind. Rumors explode. Banks failing. Brokers defaulting. Margin calls flooding the market. JP Morgan's men attempt a last-minute rescue. They inject capital, millions of dollars, into blue-chip stocks to calm the storm. And for a moment, it works. But then comes Black Monday. And then Black Tuesday, October 29th, 1929, the day the music stopped. The Dow plunges 12.8% in a single day. Over 16 million shares change hands, more than any day in history. There are no buyers, only fear. Brokers scream across the trading floor. Orders pile up unanswered. Telegrams flood in from across the country. Sell everything. Get out. Now. Some investors jump. Others simply vanish. Fortunes evaporate between morning coffee and the closing bell. In less than 1 month, the market loses $30 billion. In 1929 dollars. That's over $540 billion in today's money. Gone. And the bleeding doesn't stop. Over the next 3 years, the Dow falls nearly 90% from its peak. Think about that. If you had $1 million invested, you'd be left with just over 100,000, not because you made a bad choice, but because the system buckled underneath you. Retirements gone. Businesses closed overnight. Banks collapsed under their own weight. The American dream shattered. This wasn't just a market crash. It was a crisis of faith in a system, because when belief collapses, so does everything built on top of it. The crash was a moment in time. The aftermath was a generation. America didn't bounce back. It broke. Over 5,000 banks collapsed. More than 15 million Americans lost their jobs. In a nation of just 120 million, that would be like 40 million people losing work today. Entire industries disappeared. Factories shuttered. Farms foreclosed. The middle class hollowed out. Families were uprooted. Men who wore suits on Wall Street one year were standing in food lines next. Mothers skipping meals to feed their kids. Fathers left home out of shame. And the markets? They didn't recover to pre-crash levels for 25 years. But maybe the cruelest part of all, most of the people who lost everything had done everything right. They worked hard. They saved diligently. They trusted the system. And still, the system failed because their futures were tied to one wheel, and when that wheel stopped spinning, everything fell with it. There was no safety net, no backup plan, no insulation from disaster, because no one believed the unthinkable could happen. But it did. And it still can. Markets rise, markets fall, but your future shouldn't hang in a balance every time the stock market flinches. Those who truly learn from history don't just ride the market. They build structures that survive its worst days. And here's the truth. The wealthy don't rely on hope. They rely on design. Quiet tools, advanced strategies, built not to beat the market, but to protect from it. And that's what I'll show you next. We talk a lot about history, about crashes, collapses, and what happens when people trust the system and the system breaks. But what if I told you there's a strategy most people have never heard of? One that quietly protects wealth during market chaos without relying on timing, luck, or hope. It's not a hedge fund. It's not a crypto. And it's not some shiny new app. It's called Index Universal Life, or IUL. It's type of a life insurance, but not the kind that just pays out when you die. When structured properly, it becomes a tax-free growth account that's linked to the market, but protected by a 0% floor, meaning when the market crashes, like in 1929, you don't lose a dime. And later in life, you can access that money tax-free for retirement income, college funding, or any goals you choose, while still leaving a legacy. It's a strategy the wealthy have used quietly for decades, legally, predictably, and with total control. And if you've never heard of it, that's not your fault. Most advisors don't offer it. Wall Street cannot make recurring fees from it. And most agents simply don't know how to design it right. So if you're curious how this actually works in today's world and whether it could fit into your financial plan, start with our IUL Custom GPT. Think of it as your personal AI financial strategist, available 24/7 to explain every detail, run scenarios with your real numbers, and answer even your toughest questions about tax-free wealth strategies. Hundreds of people have already used this tool, and it's like having a private consultation with a wealth strategist, except it's completely free and there's no sales pressure. The link is in the description below. No email required, no opt-in forms, no pressure. And when you're ready to keep learning, watch our next episode. Everything you wanted to know about the 1987 crash, what really happened, and how to protect yourself from the next one. Because history doesn't repeat, but it does rhyme. So let's make sure you're ready when it does. And remember, it's not what you earn, it's what you keep. Enjoy the ride.